Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today we have a lot to cover, and we're going to break it down a little bit differently today. So we're going to cover grains and really looking at inflation from a food perspective on a global level, and we're going to touch on why that's important in terms of China. Then in the second segment, we're going to look at what's happening within the U.S. Again, U.S. economic indicators. Segment 3 is going to be a deep dive on housing and some inflation capacity. And obviously, I'll put in the comments the article I wrote about inflation, where we see it right now. And then segment 4 is going to look at Europe, emerging markets, what's happening within that construct. And then do a deeper dive on China and in terms of Shibor and what's happening in terms of lending and where do we see some of these credit impulses, because the rates have gone much higher, and there was a quick rate shock on the overnight, which for anybody that remembers what happened in September in the US, and for anyone that works in the repo market, you can appreciate why that is an interesting tell and something to watch. But there's some anomalies within that with Lunar New Year, liquidity, which we have to explain and really kind of talk through. So before we get into this segment on food, because I know everyone's excited about it, I'd just like to remind you, please like, share, subscribe. Your support is appreciated. So before we get into just the food side of the equation, we always want to look at what is the economic activity indicators talking about. So when we look at China, China had a little bit of a pop, but then as we talked about in the EIA show, that has really started to come back off and is trending closer to 80 at this point. Just to give you an idea of how it's going up and down, but it's in a descending pattern, which is a bit concerning, and that'll remain over the next week to 2 weeks based on the Lunar New Year holiday. So we don't see too much getting back to normal. And then when we look at emerging markets, that continues to be fairly flat. It's turned up a little bit. There's a little bit of an increase, and the same with the advanced economies. But you can see, because the point of looking at this is just we had the dip going into the holiday season, and we just haven't gotten back to that pre-holiday movements. And with with COVID being reduced on a hospital side, on a cases side, deaths coming down. There are reasons why we can start to get excited, especially when we start to look at some of the vaccines. It's just the underlying economic data points are a bit mixed, with the biggest overhang remaining jobs, spending, and where are we going to get some of this next push of support as we go into the new year, as we go further through 2021. And it's important to look at China and to kick it off there, because when we look at China in general, you can see the wholesale prices for vegetables, rice at record highs. Pork is still elevated. And this is important because when you think of the Lunar New Year, what do? Buy a lot of food. They have in China, they have Lunar New Year, they have a big feast similar to what we have in terms of Thanksgiving, families together. You have this, you go out, you have the lavish meal, things that bring the family together. So this is just highlighting where the prices are in general and how we don't see that changing all that much. And we'll go into reasons why. But China is going to continue to struggle on a lot of levels, and just looking on the food equation, just given the dynamics that are within China itself. And they're going out there, they're buying as much as they can, as we described last week, as we've been describing through looking at food security. But there's still an inherent problem, because pork, now a pig has a litter, but it still takes time to do that. Where you think about cattle and beef, that takes more time because there's typically one calf per cow, where when you look at pigs, when you look at chickens, there's a little bit of a speed of getting this back. But swine flu remains a problem. Avian flu remains a problem. These are things that are keeping different items elevated. And then when we look at rice, Thailand is experiencing droughts. That has cut some of their exports. When we look at food in general, like as we said last week, Russia is increasing taxes on exports. That's going to limit the amount of exports going out. The U.S., we'll talk through WASDE for a minute because there's some intricacies that we want to go through that would be important to appreciate why WASDE was bearish pricing, which is good in terms of bringing down some of the cost, but seems to be missing some of the data points that we'll highlight in a bit more detail. So when we look through WASDE, what are we going to look at? We want to look at corn end stocks, and you can see the survey was much lower. So it was still down versus prior, but it was still outpaced the survey by a wide margin, which is a net positive if you consider how much is available to get to go pushed into our own supermarket, into the international market. And exports production should remain elevated, especially now. Yield per acre is a little difficult to get past because we've really kind of optimized when we think about water, when we think about fertilizers and seed plantings. It was actually a pretty big game changer when you had GPS in the the farm equipment, because you could make a much straighter line if you're thinking about using GPS. Because if you start to go off course, you're going to actually lose a certain amount of yield per acre because you're not going to be able to fit as much. So those are things that move up and down, don't get me wrong, but within a certain percentage. Then when we look at soybeans, something very similar. What the biggest shock, or really shock in general, was the limitations that came through based on some of the data we had from China. So when we look at U.S. soybean ending stocks, you can see that even though the numbers were better than expected, we're still very low in terms of where the monthly forecast is. And remember, this is a forecast, so there's always movements back and forth. But we continue to see the monthly forecast is heading in the ending stocks going below, really over the last, at this point, 10 years. So you can see the tightness in the market that's going to continue. So even though we're getting a pullback in pricing, we're not really going to see that go too much further. And then the same with corn ending stocks. Now we've seen the corn ending stocks come down. The question is, are they going to trend lower? And the short answer is going to be yes. They're going to continue to trend lower. And here's the reason why. So when we look at some of the data points, so the one thing to keep your eye on when you're thinking about, where does this data come from, and how is it being utilized? And Karen Braun, who is, I highly recommend following. You can see her Twitter handle on the bottom right of the U.S. corn ending stocks and the U.S. soybean ending stocks. So one thing to look at, and this is why there was some confusion as to what the USDA put out, because the FOA put out something very different. So the USDA's latest numbers doesn't really fit a narrative that we've been seeing. And when, from our perspective, we follow tankers, we follow ships, and we're seeing those differences, because when we look at the narrative is sharply lower Chinese supply. So USDA has 68% of the world's 2021 corn carry out in China, above the 5-year average of 66%. And stocks use without China is about 8.8%, an 8-year low. So the idea is that where is this coming from? Because the FOA made a large 54 million ton cut to Chinese corn stocks last week versus its December forecast. And the USDA didn't do that. So the question is going to be, well, why is the USDA and FAO different? Is it the USDA's intentions are coming into question because they're really not sure? They're going to hold the line now, and then they'll make an adjustment later on, because it's really not certain as if the FAO uncovered something new, or if they just thought that there was a makeup number and the USDA could make up as well. So again, there's really no guarantee that the USDA will, or even thinks it needs to make a Chinese corn stock adjustment in yesterday's release. It's something that could come out going forward. And then the trade estimates for world stocks certainly do not factor in a large cut in Chinese corn stocks. So any large move would be that bullish surprise. So which is why we're watching this closely, because corn's down $23. Beans are down 46, wheat's down 17. So there is a big movement in terms of seeing some of this normalization. We're still at multi-year highs in pricing. So it's not with that we're still, it's just kind of normalizing a bit as we're trying to understand where some of these data points are coming from. And I'll go through why with some data coming out of Brazil. So we've shown this chart many times. We just want to highlight again. The reason why we're talking about this is because food insecurity has been worsening since 2014. And now that we're getting a rise in droughts, a rise in not obviously the population in general, so a rise in droughts, flooding, just unique or larger weather events are creating a much bigger problem when we're talking about some of the food insecurity. And I just did a podcast with Ryan on the War Room. I'll post that link as well, where you can listen to us talk a bit more about some of the impacts that this is having on food insecurity. But it's important to understand why this matters between the friction between China and India in general. Because when we look at, where is the lush forest? Like where are we seeing the amount of growing capacity? And that's why we talk so much about the 15-inch line, and I'll have a picture of that in a moment. But you have a lot of the populace in 50% of the world's population lives within a large part of it lives on the coast of China and lives on that plains between India and the Himalayas mountains. So that's why we talk so much about these friction points, because when we look at the low-lying land, it comes through Bhutan, Sikkim, and Ladakh becomes a bigger issue. When you think about the topography of the region and where is China trying to position themselves on a military side, where is India positioning themselves on the military side, and where can you grow crops? Because this also leads a significant amount into where is their arable land. India, that is the western side, the eastern side of the country, along the Himalaya side, that whole breadbasket region that then goes into Bangladesh and down and around into Vietnam, into Laos, Cambodia. Like these are things that we, in Thailand specifically, as we look at this, as we shift further over to the east, these are reasons why we look at this so closely, because food is such a big part of what is going to drive people to war or conflict or looking at a land grab. And this is just, we showed this last week, just wanted to show it again. You can see just 50% of the world lives, and that area that we showed before on that flatlands before the Himalayas, and then along the coast of where we see China, it's lit up like a Christmas tree. This is where a large populace lives, which is why there's a food shortage, there's a food problem, because there is a lot of mouths to feed in this region. But when we look at last year, you can see that there was a massive flash drought. And we talked about this in our shows covering the Three Gorges Dam and the Yangtze River and the Yangtze Basin. That was where there was a significant amount of flooding, which is obviously the opposite of the drought, because there was massive floods coming down through the tributaries that destroyed a lot of this acreage. So when we look at these droughts that happen, this is what we were talking about, that also it bled all the way down into Southeast Asia. So this is why we keep talking about these unique events that are driving some of the problems, because we're getting drought as well as flooding, which is impacting total yield, and again taking a lot of this food out of the market because they're not generating those type of yields. So just keep that drought in your mind's eye when we look at the Chinese population density. So the Chinese population density is over to the right of the 15-inch line. So the 15-inch line, anything to the right of that, is where you have the best arable land, the best chance of growing crops, because you're getting more than 15 inches of rain, which is the accepted number to try to grow crops. And everything to the left, you get less than that, which again means that a large part of this country doesn't have the ability to grow its crops, where China has about 6% of the world's arable land and about 21% of the world's population. And if you look at the population density, it's no surprise that a lot of the population also lives on top of the arable land, again, cutting down the amount of capacity that they have to grow their food. So they have to turn to the international markets as they have such a large population. But when you think about coming south and you look at Nepal, Bhutan, Bangladesh, Myanmar, as we've been talking about, the Chinese Myanmar economic corridor coming into the Bay of Bengal, the reason why the Doklam Plateau and Sikkim are so important is because as they come south into the Bay of Bengal, there is a significant amount of a very good farmland that China will be interested in. Again, things why we're always looking at what are some of the motives and what are some of the potential issues that could arise as we go through, not only just this year, but throughout the next decade. And this is just looking at UN food and agriculture prices. So as we go back, you can see that we're on an upward trajectory, and that it's not going to stop. And when we think about food security, again, this is why we keep talking about food security, because there was a big drop between 2014 and 2015 in terms of just cost, which helped the food insecurity equation. Prices came down. There was a lot of bumper crops that moved throughout the system. And now we're going up in the wrong direction, which again is leading to more strife, more problems, more conflict, because nothing's going to drive people to battle more than a starving family. Because I've said it before, one of my favorite quotes is, "I don't hate the man in front of me, but I love the people behind me." And again, that's what you have to think about of, are you willing to go to war to feed your loved ones? And the answer is most likely and a resounding yes when you look throughout history to when we crawled out of when we were still apes. And again, these are things that we have to consider when we're looking at a weak economy and a problem on food security. And this is just looking at what is happening in China, in Brazil right now, and you can see they are well below the 5-year average in terms of, between these two charts, in terms of harvest as well as plantings. And based on the weather updates, they're still gonna not be able to plant beans at the level that they should or that they want to, because of a lot of rain coming through that is flooding the region and hindering a lot of this planting. So again, there are ways to try to close this gap, but the longer you go on this time frame, the harder and harder it is to get your full crop planted. But also, if you can't get the seeds in the ground by a certain point in time, your yield inherently drops. So like, let's take the US for an example. When we had a slow planting season last year and we were able to catch up on that, but if you can't get, I believe it's the third week of May, and that changes based on weather. If you miss that and you're getting into June, your yield is going to get lower because the crops, the seeds won't be as mature. They'll be more open to intense heat, which can burn the roots. There's a lot of issues because you need to establish a root system before a very specific date. So again, these are things that are going to become a bigger issue, especially when we look here, when we're considering just what the overall flows are and what that crop is, because that's just, again, going to drive up prices as China continues to buy. So when we look at the monthly U.S. corn and soybean exports, we continue to set all-time highs. And if you look at just the trend we normally have that kind of normal dip into Feb, and this is just we're not seeing it. Like, we're just continuing to drive higher, and that's not going to change just based on what we've seen come across over the last few weeks. And then when we look at China wheat feed and residual use, you can see just the millions of tons that are going through in terms of what is being demanded and what is being moved into their market, which again is absorbing from the surrounding areas, again, tightening the market, driving up prices, which is going to become a much bigger problem over the longer term, especially when we look at U.S. net exports, which, they continue to trend either at the top of the range or going above that range as we go through the week of Jan 28th, which we continue to see as a much bigger component of where is this going forward. Now, just looking at in general, just looking at commodity prices, I think it's important to look at cobalt, lithium. When we look at just the commodity surge, it's really looking at the EV side, because when we look at cobalt, lithium, when we're looking at corn, coal, WTI, and then we look at nickel, tin, they're all related to either power generation, in terms of the tightness created by Saudi Arabia, or going into green technology. And these are things that we need to look at when we're considering what is going to be the price availability of these commodities and how will that shake out in terms of inflation. And this is just an interesting chart looking at the Tesla affordability around the world. And this is one of the reasons why they've announced R&D to create a $25,000 EV, just because they're still expensive in comparison to what's available in the world. And the reason why we showed the different components going into the batteries is how much cheaper can that battery get as we have prices going up, as we have more demand going up, because it's not only Tesla that's demanding battery components. You're talking about smartphones, computers, huge swaths of just technology, everything from lawnmowers, weed whackers. Everything you can get has a battery alternative or a battery powered option, which is just going to continue to tighten this and is going to make it harder and harder to make it the affordability without shrinking the battery, which inherently shrinks the overall distance that can be driven. Until obviously that's just using current technology. I know there's technology being created. There's things that are working right now at a lab level. The question is, can it work within a real world test? Because some of the stuff and within the lab scale is very promising. So again, these are things that have to be considered, because this is also going to drive up the cost of other goods that we've seen come down over the years. Technology has been one of the biggest deflationary factors in terms of information storage, data storage. If you think about the amount of data that can be stored and how it's pennies on the dollar, where initially you're talking about dollars, full on dollars in terms of gigabytes per storage, and now it's just. But how much lower can that go? How much cheaper can things get, especially when we have the prices of quartz and other going higher, tin, some of these key components that are just getting and driving up, which is again going to push inflation. It's going to keep prices elevated, and it's going to hurt some of this adoption as we go through the battery technology and the evolving world of green technology. So now that we kind of covered that, in the next segment, we're going to go through in more detail what is happening within the economy, the U.S. economy, and kind of what do we expect, and what are going to be some of the key drivers to watch as we go through the remainder of the year.